State Bank of India, the symbol of trust, service, and India's economic backbone. But today, a silent transformation is taking place. A shift that raises a difficult question: is SBI slowly walking towards privatization? Public sector banks, especially SBI, were built with a purpose: to mobilize savings and lend for nation building. But over the years, something has changed. The focus has expanded from deposits and loans to aggressive selling of third-party products like mutual funds and life insurance. SBI Mutual Fund, it operates as a joint venture between SBI and Amundi, a European asset management company. SBI Mutual Fund manages investments across various asset classes, catering to both individual and institutional investors. It has become one of the largest mutual fund managers in India, leveraging SBI's vast customer base for its expansion. But here's where the concerns arise. Many union leaders and employees claim that SBI's increasing focus on third-party products like SBI Mutual Fund is sidelining its primary mission. Saji Varghese, an executive committee member of the State Bank of India Employees Federation and vice president of the Bank Employees Federation of India, criticized SBI's shift towards a profit-centric model. Banking leaders argue that SBI Mutual Fund primarily benefits large corporate clients, using depositors' money for stock market investments, rather than supporting public sector undertakings or traditional borrowers. With SBI's aggressive promotion of mutual funds, the fundamental banking model, offering interest on deposits and lending money to borrowers, is being overlooked. Instead, bank officers are pressured to sell third-party products, diverting deposits away from traditional banking channels. There are also ethical concerns. Banking union leaders like Devidas Tuljapurkar of AIBEA argue that depositors' savings are being channeled into the speculative stock market, primarily benefiting corporate investors rather than the common man. When deposits are redirected into mutual funds, the bank has fewer funds available to lend for developmental projects, defeating the very purpose of a public sector bank. It doesn't end with mutual funds.
Bankers in SBI face immense pressure to sell SBI life insurance policies. These targets are creating an environment of undue stress for employees of State Bank of India. Employees report that they are forced to prioritize meeting sales targets over customer needs. This has led to allegations of mis-selling, where policies are sold to individuals who neither need them nor understand the terms. Saji Varghese, an executive committee member of the State Bank of India Employees Federation and All India Vice President of the Bank Employees Federation of India, stated,
"Lower expenses and higher profits have become the guiding principles. Employees are under constant pressure to meet cross-selling targets for SBI Life and other third-party products."
While some employees earn lavish commissions and incentives, others struggle to meet unrealistic expectations. The pressure to sell often overshadows their primary duties, leaving customers and employees dissatisfied. Despite clear directives from the Department of Financial Services to ensure ethical selling, employees claim that the reality on the ground tells a different story. The impact of SBI Life's aggressive sales strategies extends beyond public sector banks to regional rural banks, which were established to serve rural and underprivileged populations. In SBI-sponsored regional rural banks, employees are now under constant pressure to cross-sell insurance products. As a push for higher performance and targets, the SBI has conducted its League of Champions campaign, imposing aggressive sales targets for SBI Life Insurance, shifting the focus from RRB's core mission of social banking. In some cases, employees have reported receiving ultimatums:
sell insurance or resign.
These threats have sparked protests and resistance, with many bankers speaking out against the unfair treatment. Increased workloads, constant monitoring, and unrealistic targets have taken a toll on employees' mental and physical health. Many feel that the very purpose of RRBs, serving the rural population, is being compromised. This relentless focus on insurance sales is not just an employee issue, it affects the quality of service provided to customers nationwide. Especially in rural areas, where financial literacy is low, customers often buy policies they don't fully understand, leading to complaints and mistrust. Experts argue that these practices are pushing RRBs away from their foundational goals of financial inclusion and social development towards a more commercialized approach.
As of now, there is no confirmed move by the Government of India to privatize SBI. In fact, experts have stated that SBI should remain in the public sector, given its size, reach, and crucial social role. Still, the operational shift we are witnessing, from service to sales, from deposits to distribution, has sparked real concerns among employees and unions. And while these changes may not officially signal privatization, they do reshape how SBI functions and whom it truly serves. Bank unions and employees are urging SBI to refocus on its core mission, traditional banking. Ethical banking practices, balanced sales targets, and a renewed focus on deposit mobilization must take precedence over aggressive third-party product sales. As India's largest public sector bank, SBI has a responsibility, not just to its investors, but to millions of depositors and employees who rely on it for financial security and employment. What do you think about this shift in SBI's policies? Should a public sector bank prioritize profits over its core banking functions? If you believe in ethical banking, share this video and let your voice be heard.